You're watching today's video technical update presented by FX Times. It is Monday, March 8th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. I'll start this week looking at some dollar crosses. The euro and the pound dollar started bearish within the context of rising consolidation channel. Both declines are being tested and may stay narrow until the beginning of the Asian session near 7 p.m. Eastern Time. The US dollar Japanese yen pair starts this week undecided, but that's okay because the narrow ranging action paves way for a breakout. Finally, the US dollar Canadian dollar pair is nearing a significant low near 1.02050 or 1.0250, then 1.02. The price action has slowed and hints at possible reversal rally, so we should get ready for that. This video is being produced at about 3 p.m. Eastern Time near the end of the US trading session. Starting here with the euro-dollar pair, we have seen the euro-dollar pair kind of decelerate. It's sort of developing a rounded bottom, but basically it's a range between here 1.3850 and 1.3450. This is 400 pip range. So the market has been in a slowly declining channel, but since over here, February 19th, or here, February 23rd, the market started going sideways as the low stopped making lower bottoms. It was started to be flat, and actually the momentum started to pick up a little bit, although it has been choppy, and you can see that with price action making new highs from these highs, but it's still within the context of this wide ranging action. So one projection was towards 1.3850 or 1.3840. The market did not start the week following this outlook. There was a little decline, and the market, but even that decline is being tested, so we still may continue with the rally until 1.3840. Judging or looking at the 1 hour time frame, we see that the market came down in two swings, so it could be over. This could be a bullish Gartley. It's testing 1.36, which is the previous resistance here, so it's a power line, and we may see bottoming action in the Asian session. If it does, and the market does continue to rally, a break above this trend line, making a high, closing above 1.37, would be an indication of this further rally towards 1.3840. Now the bearish scenario is a decline. Of course, first it has to test this 1.3450 area, and then further decline after that spells, looking at the daily, if the decline, say, if it breaks this 1.3450, the next significant retracement level is here, 1.31 area. Okay, so that's the intermediate outlook, but the short-term outlook seems to still be bullish, and that would mean a projection towards 1.3840. Here's a look at the pound-dollar pair, also with an anticipation of further correction rally towards this 1.53 area. However, the week, just like the euro dollar, started dollar strong, so there was a decline in this pair. Now, looking at the 1 hour time frame, I did post an article anticipating this decline to 1.5070. So and you can see this is the rising support line, and also between 61.8 and 78. 78.6% retracement. So the market that post was around here. We had a little bounce and then a further decline. So now this decline looks like it might be over because it's a two-legged decline, correction. So if it's a correction, two legs should do it. Of course, there's still a possibility of a third leg, but this is supported by this rising trend line. So if the market bottoms here, if you see a flat action just like here, then a bullish candlestick just like this one would indicate further rally towards 1.53. Now if the market is, instead of a flat and then a signal, if the market starts to shoot up now, sort of similar to this type of price action, a sharp reversal instead of a bottoming reversal, then you may want to wait for a little throwback just like this, a little throwback before confirming the rally towards 1.53. So those are the two scenarios that could come up if this is a finished correction, and how you may want to prepare for them. Again, sharp reversal, you want to wait for You want to wait for a throwback, but if it's flat and then there's a bullish signal, that's more likely all you need to confirm your rally towards here again 1.53, or maybe a little bit below that. You see, this is the previous power line here, and that's here is another power line, which is where the market is tested now. So if the market breaks above, you see in the 1 hour time frame, even if the market breaks above this counter trend resistance, still look for some monitor the rally at 1.52. Okay, so here at 1.52, monitor the rally. If the market looks like it can't get through it, then you might want to just hold off your outlook towards 153. Okay, that's it for the pound dollar. The US dollar Japanese yen, as we've seen, we projected a possible further decline to 57, but the market here started to reverse, and this was a very strong reversal signal. Now the market could still continue to go down to the 87 area, so we have to monitor this action at the current moment. Now looking at the actually first looking here at the stochastic, we see that the market is crossing over in the overbought, but it looks like there might be some kind of continuation following the price action. Now the price action is very narrow. Your momentum shows a correction, so right now you might want to set up some channel lines like that, and if the market breaks above our 90, 68, 70 area, that spells further rally, and in short term that rally should test this previous high here at 92, or if not, it should test a declining trend line near 91.50 instead, or 91.30, where this is the 78.6% retracement. So if the market, but if it does get up there and a decline follows, you have to notice that this sort of was a three-legged move, and that might be an impulse move. So if the market breaks above, get ready for further bullish action, but do wait for a throwback. If the market breaks below, you also want to wait for a pullback and then a confirmation before you start with the 87 outlook. So right now the market is undecided, and the outlook is very unclear until a breakout and some kind of a pullback or throwback can give you further confirmation. We see here in the daily chart of the US dollar Canadian dollar pair that the market is at a very significant low here at 1.02, 1.0250, although the momentum is not showing any reversal yet and is very strong in the bearish side. Looking at the 4-hour time frame, we see here the slowing down, the deceleration, but there hasn't been a reversal signal, all lower lows and lower highs. We are nearing the bottom, so wait for bottoming action and a break above. If the rally breaks above 1.0370 and we can have a confirmation through a throwback, then a rally can continue, and a rally could continue towards this declining or this channel resistance here around 1.07, 1.0650. So yes, we are near a bottom, and look for reversal signals. If not, a break below aims at the parity level, or the 1.0 level. However, in the short term, anticipate this kind of action to come. And that's it for today. Visit fxtimes.com for more fundamental and technical updates, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.